What's up, everyone? I am 7-Star Mike for the new Trade Talk Media, where we help retail traders simplify trading and increase their profits. And today I've got a special guest. We are talking to the OG of Flow, the Flow G, Charlie, who's going to show us some of this week's hottest action in flow trading. I'm going to throw in some tips and tricks, and let's stop wasting time and get right into it for this week's edition of WTF. Watch the flow. All right, Charlie, let's kick this off with Dish, D-I-S-H. What do you got for us as far as the flow?
This was the first one we traded Monday, and I'm going to go ahead and isolate that down. You see when Dish first started coming through the flow, low 30s, Maria was the first one to jump in this. And on that same day, the flying users reporting Dish, options flow detected, Dish, So this was the first one out of the week. So the flow that we're going to go over is the stuff that you don't always see. We get flow in AMD and Apple and stuff every day. So I'm actually going to, and you can see Dish, this was at, up $5 since then. I think we got out of this one on Wednesday or Thursday. I'm going to go ahead and pass this to you and let you show the chart.
Okay, so on the screen here, this vertical green line, that's where the alert actually came out. And if I zoom in here, you can see it was kind of running in the morning, and then it took a little bit of a pause, and then this big green candle came in. That's where the alert actually came out, on that big green candle there. So they were actually buying it a little bit before that, because this candle here is the one that triggered the alert. So there's actually some buying coming in right here in those few candles before that. So we saw a nice run, then it kind of hung out for a little bit, and then this big green candle, there was some buying there that triggered the alert. And then if I pull out to the full chart, you can see what happened from there. It just took off the rest of the day. The next day, it actually gapped up even further, and then even today, it's still climbing higher than that. So this triggered somewhere around mid 32s to 33s, and then it went up to about almost 38 yesterday. And it's pulled back a little bit since then, but that one was basically triggered at about 32.5 to 33 and ran all the way to almost 38. So that's a nice move if you held on to that. I don't usually swing for 4 or 5 days, so I'm not usually capturing that full move personally. But even within the same day, that one made a nice monster move just by following the alert and then getting out somewhere up here. It pulled back a little bit and then climbed again, but definitely room for a nice move on that one. Just, again, following the alerts. What else do we have? Let's pull up another ticker. So if you like what you see so far, head on over to Twitter and follow at Blackbox10. That is the OG of Flow. That is Charlie. And check this out. Throughout the day, he's posting flow live as it comes in. He posted Chewy flow live here. That was at 3:10. Those contracts are at 4:10 when he does an update. Check this out. Snap. Interesting flow. He's going to be posting throughout the day live anything that catches his attention here. That is at Blackbox10 on Twitter. Give him a follow, show him some love, and let's get back to the flow.
We're going to go to JPM. Now, people will ask, you had all October on this. Why did you sell? It was a 50% gainer. 50%, is 50%. So, yes, these had out till October, but it was just a nice move. Just a nice move. JPM, same day. Now, what I liked about JPM, these were really out of the money. And they were short time frames. But for next week, actually. Is this the right? Yeah. These things started coming through at 97 cents. And I think, if I remember right, I filled it $1 and Maria got $1.01. So I was actually happy that I beat her for a change. But you don't see just tons and tons of JPM, and when we do, it normally works. I normally don't play this far out of the money, but this is one where, like, why do they keep hitting it? Why do they keep hitting it? So we went with this one, and I'm gonna pass it to you to show you let you show the chart. This is one I had posted on Twitter that since I sold at the end of the day, which was nice gains, it'll probably gap up, and it did. So I'll let you show that chart.
Yeah, so on this one, this is Monday over here. So when the alerts come out, we have a nice run for the rest of the day. And then we closed at the high of day, not quite high of day, but just barely under. And then Tuesday, we have that huge gap up. It closed somewhere around like low 101s, and the opening candle on Tuesday was 105.68. So this is one of those ones where if you closed it out the same day, no one's going to yell at you because that was a huge gain. But if you held it, you would have had even more of a gain. And that just comes down to risk tolerance. Are you going to lock in a nice gain, or are you going to let it run and see what happens? Because if this didn't pop the next day and you're up, 60, 70, 80%, 150%, 160, whatever your gains are, if you don't lock those in and then it gaps down, you're going to be crying that you didn't lock it in. So depending on your trade style, depending on your risk tolerance, there's just different ways to manage each trade, and everyone's going to do it a little bit differently. So whoever locked in gains the same day made a nice trade. Whoever swung it to the next day also made a nice trade. And then if we look, so those are going out to next week. So if we look at the rest of the week, it actually gave most of that back. Actually, depending on where the alert actually triggered, around 97.30, let's call it, we're almost back there now. So this is one of those things where if you don't manage the trades properly, you can have 100, 150, 180% gain, whatever this one ended up being. Let's say it was 60%, and then on the gap up, let's say it was 100%. If you didn't manage that, you can see right now we're back to where we started when the alert first came out. So there's the ability to make money following these alerts, but if you don't manage them correctly, you can give all those gains back. And then that's not a matter of saying, well, the alerts don't work. The alert showed us what the big money was piling into, and it made a nice gain, and then it gapped up and made a much nicer gain. So at some point, we have to take responsibility of managing that trade before we give those gains back. So JPM was one of those that had a nice same day gain, and for those that swung, they also had a nice next day gain. So that's one of those ones where two different ways to manage the alert. Both were successful. It just comes down to your personal trade style as far as, do you lock in gains the same day, or do you swing it for a longer term potential bigger payouts? JPM worked out pretty nice. What else do we have? Well, there's a bunch of tickers we're going to look at today. What's next on the list?
Net. This came out on Wednesday. NET. And you can see down here in the 32s, they were buying July 37s. This is one of those we got in the alert very quickly because we just don't see net. This thing looks like on my chart, probably over 39 at one point. This is one that you just don't see flow on. It hit the unusual scanner. I don't even know if I'd heard of the company. So this NET was another one. I'm going to go ahead and pass it to you and let you show the chart on this one.
So again, this vertical green line here, that's where the actual alert came out. I'm going to zoom in. Let's go just to Wednesday only. So we had a little pop in the morning, gave it back, and then started climbing again. That's where the alert came out. But remember, the alerts are triggered based on what the big money is actually piling into. So it's not a one-time buy where they basically purchased right here. So there's some buildup going into that in the first few candles, and you can see it start moving upwards. This line here is just where the alert happened to trigger based on buying from the previous few candles where they started buying. And then this was one of those ones that just kind of crept up the whole day. It wasn't, straight up, but it wasn't a stair stepper either. It made some pretty good moves for the rest of the day. And this was one that I was actually in. I followed this one also. I closed out for some nice gains the same day. But if we pull back to the rest of the chart, let's zoom out a little bit. So Thursday is here. So I closed out, I don't remember where I closed out. It was before this dip in here for pretty nice gains. But you can see again, if you swung it, the next day it opened up. And these are just rough numbers. It closed roughly about 35.90, we'll call it. And the next day it opened and popped to 37.28. So again, I had same day gains that I locked in, but someone who swung the position could have made even more than me because it's a different trade style. And then Friday, that's actually today. It popped up even more to 38.48. So again, the alerts are basically showing us what the big money is doing with their money, and then it's up to us to manage how we want to follow those. I prefer to lock in gains pretty much day trading and scalping, but someone who swings into the next day has a chance to make more than me because they're willing to let it ride. But my comfort level and risk tolerance is to lock in gains when I see them and have them, and not really hold a lot of positions overnight. So depending on your trade style, we can take the same alert, trade it differently, and both be successful with it. So net was one that I actually day traded, made pretty good money on, and other people who swung it also made a great trade as well with a different trade style. So again, following these alerts, it just comes down to know your trade style, know how you like to trade, and then manage these alerts to your trade criteria. What else do we have? There's got to be a few more out there we can look at.
Oh yeah. So MOMO was one people were actually like, man, is there a glitch? These say 2176. Is there a glitch? So you can see these started coming in. Again, this was Wednesday, and they came in all day. And these things are just climbing and climbing and climbing. And I mean, we got fortunate. We'd seen this flow early. We got down in here. These things, same day, more than a double. And they still got out to July. But I'm going to let you go ahead again. MOMO was one of those. It's like, where did this come from? I haven't seen this. I'm not used to seeing this one. So it's unusual to me. Right? It's something different than your average, tickers that we'll show in a second. So passing this back to Mike.
Yeah, and here's one of those ones where I get a few DMs throughout the week that says, how do I know when to follow? Some of these look like I pull up the alert. Let's say the alert is for $1, and I pull it up and try to get in, and it's already $1.40 or $1.60. This is one of those that kind of, if you see where the alert actually triggered, it was on this big green candle here. So we're going sideways for a little bit for most of the day, little dip, and then it just pulls up a little bit. It finds some resistance where it was early in the morning, and then it just has this huge pop right here. So if you're looking at the alert and then you pull up the chart, you're probably looking at it when it's already about up here. So some of these alerts, you've got to be quick to get in, or like Charlie is saying, if you watch the flow live, we have a chance to get in some of these alerts before they actually alert, because we're not waiting for it to alert. We're watching the flow as it comes in live. So let's say something takes just random numbers. Let's say there's 8 lines of flow that actually trigger the alert for us. We're watching the first, the second, the third, the fourth, the fifth come in live. So sometimes we'll catch those before it actually meets all of the criteria to alert for us, but we see it coming in while it's building up that criteria. And sometimes we get in these a little bit early before they actually alert, just based on the way the flow looks. And that just comes with seat time. With experience, you'll be able to see what the flow looks like, how it comes in, and compare that to the types of alerts that come out. This is one of those ones that if you didn't get in watching the flow, you might have thought you were chasing it. But like Charlie said, he got in at a better price than the alert by waiting a little bit. This one actually dipped quite a bit and then came back up, and then we had another gap today to 2031. So again, there's more to flow trading than just waiting for an alert. The alert comes out and you just automatically buy the alert. If you do that, I find you're probably not going to be as successful as you think you could be as a flow trader. So it really comes down to knowing the type of trader you are first and foremost, like I said before. And then when you find a trade that matches that trade style for you, you've got to know how to watch the alerts. It's like, how did the flow come in? It's not just the alert, but how did the flow come in? And then you've got to be able to correlate that to the chart. So does it make sense for me to get into this alert based on the chart? Would I normally have gotten into this position if the alert didn't tell me to get into the position? So there's a lot more to flow trading than just waiting for the alert to come out and then entering following the same alert. It's more of the look and the feel of how is the flow coming in. And that's kind of the next step of flow trading is one, if you're new, it's perfectly acceptable to sit down and wait for the alerts and then pull up the flow to match the alert and kind of get a feel for why it alerted. But the next step is really watching the flow live and getting a sense of how it's coming in. And then sometimes you can jump the gun and get into a trade before it actually alerts just based on how the flow looks. And there's a few of them that we were looking at this week that I actually got in before the alert because of the way the flow looked. This one, MOMO wasn't one. I actually skipped MOMO. There were a few others that I got in based on the flow, and then we saw it alert moments later. I think you're going to talk about one of those tickers coming up. So what else do you have?
Chewy. Hold on, let me take the, there we go. Show my screen. Chewy. Now this one, I did not like 51s on Wednesday, but you can see these 54, 60, you know, into the 95s, probably went over $1. I went ahead and said, you know what, I'm going to change that to 50s because I just wasn't comfortable going out 51s. I quick popped that one. It's still running again today. These will more than likely expire worthless, but there was a great trade in there. And Chewy's also had flow today that I actually changed as well. They're buying these 60s out to July. So I changed that to 50s. And I posted that earlier on StockTwits and everywhere on Twitter. I said, you know what, this is interesting flow. I can get 50s for $3.10, and that's what I bought versus paying 80 cents, 60, 70 cents for a 60. So yeah, I paid more, but look at this. If this thing hits 60, my contract's worth $1,000. So I put that out earlier at $3.10. That's now going $3.50. No, I'm sorry, $4 by $4.10. So those are up $100 a contract. Since I posted that on StockTwits, Twitter, right here. Yeah, I paid $3.10 versus going $65 if they're right on gold. So this is some flow from today, but we started out looking at the flow from the other day, which again just kept me looking at Chewy all week. And so, Mike, I'm gonna go ahead and give you this chart.
Okay, so this is an interesting one. Like you said, the first ones came out Wednesday on this line here. I like to put the vertical lines on the chart just to give us a reference of where the actual alert triggered. This is one of those ones that it had a nice little pop, gave some back, popped again, and then it just kind of trailed off for a little bit. But we saw repeated buying today, which is where this green line comes in. And look what Chewy's done so far. So I'll zoom in on today. We had a nice little pop. That's where the alert came out today, gave back a little bit, popped again, gave back a little bit, big pop, gave back a little bit, big pop. So this one's got some ups and downs to it, but generally the direction is just going in the right way. So on yours, I mean, being up $100 a contract, which is what, roughly about 33%. You paid 3 something. That's not bad for a single day's work, and you've got time on those. So plenty of time to let that continue to play out. Already up 30-something%. That's an awesome one right there. What else do we have? I know there's a few more we're looking at here.
Yeah, this is one I didn't play. Square 120s. Very interesting though. They've got these out to August. I did not play this, but it has had a nice run since these came out in the 98s. I just felt that was interesting because it had some time on it, so we'll take a quick look at it. It was too far out of the money for me. I didn't even change the strike and expiration. Okay, you've got the screen there.
All right, so this is another one where it had a nice big pop. The alert came out somewhere in this range here. I don't have the actual time on that one, so I don't have it marked on the chart, but that came out somewhere. You can see on the flow that the spot price was 98 and change. So that came out somewhere in this area here. Had a nice pop, gave it back, gapped up, had a nice run. We're in the process of giving that back now. but that one alerted somewhere in the mid to upper 98s, and it hit a high of 102 today. Now, some of those that have time that are a little bit far out of the money, some of those are ones where we look at it and we go, that's a little too far for my liking. I don't know really what they're thinking. And we've seen that some of those tend to work out. So if you have the risk tolerance, those might be trades to look at, but you've got to understand that when it's that far out of the money, you've got to have the time to be able to get there and the risk tolerance that if it moves against you, you're okay with, taking a bit of a loss on those. So again, that comes down to trade management and knowing your personal trade style. Are you okay with swinging something for 4 weeks that's 15 or 20 bucks out of the money? Do you know the risks associated with that? If you do and you're comfortable with that and that's your trade style, there's flow like this that works out for you. You can basically follow that and sit in it for a little bit, see if you can let that trade develop. For new traders that might not have a big account, you probably don't want to go with something too far out of the money like that. So again, the alerts are all about showing us what the big money is doing. Where are they putting their money? It doesn't mean you have to buy every single one of them. So you've got to know your trade style, know your risk tolerance, and if the trade fits for you, then you can go ahead and follow some of these alerts. This particular one was not for me, so I passed on Square. But again, if you have the swing mentality and the risk tolerance to do something, 4 weeks out, that's 20 bucks out of the money, you can follow what the big money is doing. They put their money behind the trade. That's something that if it matches your trade criteria, you can go ahead and follow that. Just again, make sure you're managing these trades. What else do we have? I know there's a few more. There's one that I'm waiting for specifically. I want to point something out, but I'll let you get to the tickers. What's next?
All right, I don't know if it was VEEV, but I'm going to quickly talk about this. This is some nice flow out to December. I'm not going to pass this to Mike on this one. Very nice flow, about $1.6 million out to, well, it's different strikes and expirations, but a lot of December flow there, so that's definitely worth keeping an eye on. I did not follow that. Snap. I don't know if this is the one you're waiting on or not.
Not yet.
But man. They came in hitting these 2250s and 2350s like they're just like going out of style. And this is the 2350s here. I actually played the 2250s, got out from nice gains. I think Maria's still holding these 2350s. But it was just ground and pound. And snap probably works about 80% of the time, maybe a little higher. Full ground and pound on snap. There's no way to turn that down. Again, I'm going to go over some flow in a second that I think trips people up. But this one, and I'm not even going to pass this one to Mike. You can see this was down in the 21s when it started. It hit 2260 today. Best I know, 52-week highs. Yeah, 52-week highs for snaps. So these contracts, I know Maria still got these. These are jamming. No need to pass that for a chart. I'm going to show you something else that caught my attention. I did not play YY. Mike, that's probably not the one either.
Nope. We're getting there, though.
But if you see when it was these 100s, I think we were looking at.
This one definitely had a nice move.
Yeah. Is this right here I was looking at? I didn't get this one either, unfortunately, because as you can see, they were buying hundreds for July. Decent size in here too, right? I mean, for YY. You don't see YY. Hit our unusual scanner. This YY, bam. It's one we talked about. I did not pull the trigger, even though it was unusual and I should have. I mean, these contracts went over $10, I'm sure, if not higher. Well, they had to because the stock basically hit 100. I don't know if you know what, they probably didn't go up to $10. Let's just go ahead and look. Hold on. I know they doubled them.
Yeah, the stock price there is 90 and 91. It's trading at 98, 90, or it hit a high of 98, 97 today. So that's a monster move on those. That is some good looking flow.
Yeah. Those are only at 580, so they didn't double. But still, nice trade in YY. Again, no need to pass this. You can see this came through in the 90s, 91s, 92s. It hit close enough to 100. Facebook. This was a nice one the other day that we had pointed out. Again, I didn't follow this. I said I wanted to dip on it. But this is that flow. This is that flow that you look for. And when I say there's traders that only make 20 trades a year, this is that flow. Look at this, 260s after September. Stocks down here in the 232s, 233s when this big boy came through. 845. Here's $1 million. Here's another $1 million. So there's 2.2. And then they bought another 3.3. So you got 5.5. They spent about $6 million on this Facebook out to September. I'm like, man, let me get a dip. Let me get a dip. Let me get a dip. This is on my list. This is really moving nicely. You see the stock went over 240 this morning. Those contracts are moving nicely. Mike, do you want me to pass the screen on this one?
No, we're good on this one.
Yeah. This is just to show you more that bigger long-term when we talk about waiting for that multi-million-dollar flow. If you don't play any of this other kind of stuff we're showing you, it's fine, great. This right here is the ones you sit in your account and cross, I don't want to say just cross your fingers, but they work way more often than they don't. That's that really kind of flow. Sonos. They came on this one on Wednesday too, banging it. You can see down here in the 60s, 70s, these were all white flow, then boom, they just keep cruising. Now, problem with Sonos, and I'm just going to go ahead and talk about this. This is one of those, if you didn't take your profits that day, you got wrecked the next day. You got wrecked. This is after July still, but they did an offering, and, we made some money on that day. I actually swung a couple that did get wrecked, but for the most part, I don't want to say they were free, but they were close enough. Because we got in cheap, we sold all the way up, and these things doubled. They did an offering. Go here to news. Hell, I don't see the news, but anyway. What am I doing? Hold on. Yeah, I still don't see it. But anyway, that's what I had read somewhere anyway. So these, again, if you're a day trader, got in these cheap enough, under that 80 range. I think I was in at 81. I don't remember. These things had a good day, but they didn't have a good rest of the week. Is this the one you wanted me to show, Mike?
Nope, there's still one more coming up.
Oh, there's about 3 more coming up. That's why I'm speeding this up and not passing it back and forth. CLDR. Oh, I know which one you want to talk about. You want to talk about Billy.
I do.
Yeah. So this CLDR came out on, this CLDR came out, when is this? Yesterday?
This one was yesterday. I did get into this one. I was in with, the room was in this one for the most part. There was a bunch of us that got in CLDR together.
Yep. I had a bunch of text messages like, man, we're going to get paid today. Well, we didn't really get paid today. This is great flow. This is one of those that you don't see often. Again, hit the unusual scanner. I'll show you the unusual scanner in a second. I'm going to show you the whole scanner and the unusual scanner. But you can see they bought this damn thing all day. We got in that one. We had nice gains on that one. That's, again, some of that Mike Tyson flow that you just do not see every day. Billy. As Wall Street Jesus says, Billy, don't you lose my number. Shout out to Wall Street Jesus. That guy's a fucking legend. Anyway, this flow starts coming in yesterday. I think I got in this one at $1.10. I mean, it came in fast and furious. So I did. I filled up in here in this $1.10 range. Yeah, $1.10. I don't know that it ever traded above that. Well, maybe here's $1.11. Maybe it did, but it wasn't gains I was used to seeing for this kind of flow. And I mean, this is pounding. I mean, they pounded Billy. Now, you look at it dollar-wise, yeah, it's not multi-million-dollar flow, It's just the way they hit it and the way they hit it. And I am going to pass the chart to Mike on this one.
Okay, so here's the thing that I wanted to point out about this one. So I was in this one yesterday. I was actually filled at $1.10 also. The thing about this one, there had to be an IV spike when these contracts came in. So if you look at it, there was a candle here where these contracts came in. The high point of that candle was 41.79. I don't know where in relation that actually triggered, but on the candle where the alert came out, the high was 41.79. I'm going to pull out to the rest of the chart. Let's zoom in over here. It closed at 42.80. So it closed, well, it closed a little bit lower, but the high right before the close was 42.80. So these actually, they reached a high point at the end of the day, $1 higher than where we bought them. And the contracts actually did not move at all. And at the end of the day, I was actually down, I think it was 11% or 15% on these, even though the underlying was up $1 from where we bought them. So the IV had to be pulled out of that by the time, there's a little spike in here, and then it just went sideways for most of the day. Then we had this nice run towards the end of the day, but the contracts were still negative. So now here's today, we did get a gap up. I actually sold it it was the first 1 or 2 minutes of the day because I didn't like what it was doing yesterday. I was up, my fill today was $1.30. So it wasn't a huge trade, but I just didn't like what it was doing yesterday. And the fact that we got a gap up, I was going to take advantage of that and just close out the trade. And it just wasn't doing what I wanted it to do yesterday. So I was going to lock in gains while I had them for sure. And I gave up a little bit because they went on to run a little bit further. But that was a trade I just didn't want to be in anymore because of the way it was acting yesterday. Now, one thing I want to point out on this is we were getting messages yesterday about, oh, I'm down. Should I hold? Should I swing? What should I do? Can I cut this? The thing about this one was the expiration, again, is 4 weeks out. So when the big money is piling into this, if it's 4 weeks out, they might not be expecting a move the same day, or else they wouldn't really buy 4 weeks of time. So if you're down on the trade the same day and you're asking, should I cut this trade? If you're uncomfortable with the loss and you don't like the movement of the contracts, by all means, cut that trade and make sure it fits your personality. So if it's going to freak you out and stress you out that you're holding on to this losing trade, just cut it and be done with it. And then if it runs afterwards, you can't look back and say, oh, I should have held, because at the time, with the information you had, you were stressed out about the trade and uncomfortable with the loss. So it's okay to close a trade for a loss, even if it goes on to make a gain later, because if you're uncomfortable with the loss, the last thing you want to do is hold on to that and stress yourself out and potentially take even bigger losses. I was comfortable with this loss because it was only, like I said, 11%, I think it was, maybe 15%. And that's not really going to trigger a stop loss for me. That's well within my risk tolerances. And then today it gapped up. And like I said, I just closed it out because I didn't like the movement from yesterday. But we were getting a lot of messages yesterday about, should I cut? Should I cut? Should I cut? And just keep in mind, if you're buying a contract that expires 3, 4, 5, 6 weeks out, if you're down the same day, that might be within the risk tolerance of the trade intention. Now, the person who put on the trade, we don't know what their intentions were, but we know they bought 4 weeks of time on this contract. So it's okay to not have 100% gain in the same day, knowing there's 4 more weeks for this to trade out. So that, again, it comes down to trade management. If you're uncomfortable with the loss the same day, it's okay to cut that because that's your personality. You don't like those, swinging where you might have a bigger loss. It's okay to cut that if that's your trade style. But you might not want to take a trade that has 4 weeks of time on it if you're going to be uncomfortable with the first day if it's sitting at a loss. So that goes into figuring out the type of trader you are. If you're uncomfortable with a 1-day loss, you might not be the type of trader that wants to take a contract that's 4 weeks out, because within that 4 weeks, it might go up and down, up and down, up and down, up and down, up and down. So if you're not comfortable with that, that goes into figuring out that the type of trader you are might not be the type of trader to buy a contract that expires 4 weeks from now. So you might want to stick with the shorter term trading and look for those immediate pops. If you're going to stick with that short-term trading, though, I would suggest you have experience with weeklies or a 1 or 2 week out contract. There are slight differences to how you trade those versus how you would trade something 4 weeks out. So again, know the type of trader you are. This has 4 weeks of time on it. It was down 11% the same day the alert came out. That's not going to trigger a stop for me. It's well within my risk tolerances to be down 11% on the first day, knowing, again, there's 4 weeks on this contract for it to trade out. So that's all I had to say on Billy, because we were getting a lot of messages about people concerned about, oh, it's down, what should I do? Should I cut it? And again, 4 weeks of time, it was only down 11%, well within my risk tolerances for me personally to hold. For those that cut it, you still made a good trade, because if you're uncomfortable with that loss and you cut it so you don't suffer any bigger losses, that's still a good trade, even though you took a loss on it. It's just a different trade style. You're managing your trade to your risk tolerance and your account size. I'm managing it to my risk tolerance. So they're both good trades, even though they had different outcomes.
That one was just incredible flow. 11% is not going to budge me. Here's one just to show you I'm not perfect on flow. Oh, let me grab the screen back. By any means, nobody is. I bought this one yesterday during the live webinar along with Billy. VIPS, bought it at $1.30, sold it at $1.32 this morning. And even though I had time on this, and I've got out till, this was out to July. And, it's going in the right direction. Everything's fine as far as that goes. I got uncomfortable with it this morning, and simply because I thought it should have did more into that gap. Because we bought, I paid $1.30, but you see where the stock price was. Stock price moved up $1, and I was up 2 cents. In that situation, I'm like, no. I would have figured, at least 25, 30%. So I cut that one. Wasn't a gain. Show you another one I lost money on yesterday. I'm just going to go ahead and show you. I'm not perfect. Nobody is as far as trading goes. This go to webinar really. This one right here. I bought this, I think maybe it was 70 cents. I don't remember. Ended up selling it like 45. I did take a loss on this one. Now, yeah, because it was expiring today. Those contracts actually, I think, worked out pretty nice. I don't know about pretty nice, but they would have made me some money. But I did. I was down about 30 or 40%. It was expiring today. I did cut that one for a loss, just so, to show I'm not perfect. Nobody is. Trading's not a perfect anything. Nuance today. Oh, my God. We're going to get into the unusual scanner. This came in. We were in this one, I think I filled at 91. This thing's been all the way up to $1.40, best I know. We took profit along the way. It actually went over 25, it actually hit 25.25. So you can see where this started coming in. By the time I filled it, had just crossed $24. Now it's at $24.86. Still up nice in those contracts. This is one that you just don't see. I'm going to show you the unusual scanner for a minute. Filter. Let's go to unusual. I got it. Nuance just took it over. I mean, that's the only thing actually on there today. So I had to buy that one. Let's go back to regular thing. Let's show all options for a second. Where I think a lot of people get tripped up trading flow is they just see something like, oh, there's some Microsoft 212s. Let me buy them for $7.24. No, there's no story there. Here's some AMD's 55s. So that actually makes some sense. Look at here, TME. This is one we bought this morning as well. They pounded these 14s out to July just like gangbusters. Maria got in at 51. She beat me on this one. thing actually went over 14, went in the money for a minute there. So they just pounded this one out to July. This one's one I'm planning on swinging. This is from today. But going back to all options for a minute, you know, you're looking for a story. Is there a ground and pound in there somewhere? You know, because you can filter any of this. I can go look at Apple and just look at the apples and go see if there's a story there. But I'm looking for a story when I'm buying this stuff. God, Chewy's still running. Damn, it hit 51. So you know what? Those 51s may come into play. Really, that's all I've got, Mike. Stick to the better stuff, that multi-million-dollar flow. Stick to just full ground and pounds. Stop guessing on flow.
Yeah, that's when I do the flow class, that's one of the things I say is if you're searching through the flow trying to find a trade, it's probably not the right trade to take. Now, it can work, of course, but instead of searching through the flow looking for, okay, what trade can I take out of this? When the flow reaches out and screams at you, this is the trade to take, that's the one you're really waiting for. And those are ones you don't have to search for. They'll tell you that this is the trade. When that TME covers your entire screen like that, you don't have to guess if that's bullish or bearish. You don't have to guess if it's near term or far term. The flow is so consistent and so strong that that's just telling you, hey, look, this is the trade you've been sitting waiting for. This is the trade to take. The ones where you're really searching through and finding, well, there's some for this week, some for next week, some for 6 weeks out. Some of this is bullish, but some of that's bearish. Those trades can work, but probability is what we're looking for. And when the screen is just filled with one contract, same strike, same expiration, it's just the consistency of where they're putting their money. That's the higher probability trades that we're sitting and waiting for.
And let me go through this. I'm going to go through this chart real quick. Look it down here. Right, well, up here, and I did not take these Apple puts because I see Apple flow every day, and I pretty much ignore it. But they're up, you know, look at this, 289%. Let's go down here at the bottom. Repeater bullish came out at $2.30, went to $2.68, and now it's about worthless. Most of these are going to be daily expiration. 645 to 685. Market turned on that Apple news, going to expire worthless. 48 to 72. Now at 10 cents. So 260 Nvidia was kicking ass, 268 to 375. That's a good trade. Going to be worthless. This Amazon roulette bearish was a good trade. Now it's not. So this just shows that a lot of this is speed. Facebook actually played this one, $1.38 to $1.97. Now it's at 98 cents. And this was for next week's 250s. But what I'm looking at on this list, most of this stuff down here doesn't do anything for me. I see it every day. What I'm looking for, Chewy, which we went over a minute ago, NUAN, TME, those right there catch my attention every time because they're not Apple's, Google's. Snap caught my attention as well. Most of this stuff I just see daily, and it means nothing to me. I'm looking for that stuff I don't see. I do not see. And right there, that Chewy, Nuance, TME, I'm up $100 contract on these. Or was mine, you know, I don't know where it is now. I haven't looked, but all these are profitable trades. Look at where this Nuance went. We alerted it at 90. We were in before that. This thing hit $1.45. So that's all I've got, Mike.
Awesome. So I like doing these because it gives everyone a chance to look at what flow is catching our attention and why. And then if we correlate that to the chart, does it make sense to follow it? So today we had a bunch of examples for this particular week as far as some stuff that just really, the big money went in. We saw what they were doing live as they did it. We had a chance to follow. We had a chance to profit. You also saw today that it's about managing these alerts. Even the ones Charlie's pointing out right now that were, you know, up 40, 50, 60%, but they're going to expire worthless. You had a chance to lock in 40, 50, or 60% before it goes worthless. So a lot of flow trading is about, one, finding the right flow to follow, and then two, managing those alerts. Manage your trades. It's not just follow the alert and you're going to be a millionaire in 3 weeks. You've got to manage these trades. So today we had a bunch of examples of as far as what we're looking for. You got to see the flow. You got to see some of the charts. and you got to see how to manage these trades, because if you're up 60%, an hour and a half later, you might be down 40, 50, 60%. So that's kind of a few examples of what we're looking for and why. Hopefully that made sense to you guys and gives you a chance to view not just, like Charlie said, not the Apples, the Facebooks, but what are these weird names that we don't normally see? If you guys have questions, there's plenty of ways to reach out to us. Reach out on Discord. I'm going to put links to our Twitter accounts on the video here, so you guys have a way to reach out to us. Ask those questions. Make sure you're following the right flow, and let's go grab those profits.
Thanks, everybody.